Hello, and welcome to our live trading room. I'm thrilled to have each of you joining us today as we embark on a dynamic journey in the world of trading. Whether you're a seasoned trader or just starting out, this room is designed to be a collaborative space where we can share insights, strategies, and opportunities in real time. I'm Scott Barkley, your host, and this is probably the only time you will see me today. Now, throughout our session, we will be delving into market analysis, discussing current trends, and exploring potential trade setups across various asset classes, primarily in Forex, but also gold, Bitcoin, maybe S&P 500, and the Dow Jones. But more importantly, we'll be fostering an environment of learning and growth, where questions are encouraged and ideas are exchanged freely. You are at the place where you can earn while you learn. But before we dive in, I want to emphasize the importance of risk management and disciplined trading practices. Remember, the goal is not just to make profits, but to do so consistently and responsibly. So let's harness the power of information, leverage our collective expertise, and make the most out of today's trading opportunities. I'm excited to see what insights we uncover together. Now let's get started. So hey, if you're new here, pay attention to this video because we don't go through this information in the room, okay? All right, so I got to do this. It's the law. As you know, trading involves substantial financial risk. This presentation is for educational purposes only and is not intended to induce anyone to initiate any investment or trade. Your trading results are entirely your responsibility. So who is this guy talking? Well, that's me, Scott, on the left, and that's Jerry on the right. And Scott, that's me. I have over 2 decades of trading and training experience. I was a training consultant for FXDD, the second largest retail broker in the world at the time, for 3 years. I am the author of the Empowered Forex Trader, Strategies to Turn Pains into Gains. It's available on Amazon. Here's Jerry. Jerry is a math wizard and a coding genius. He's also the co-founder of ProAct Traders. He is responsible for software R&D and why we have the most amazing charts and ancillary tools to help us be successful in the Forex, crypto, futures, options, stocks, etc., etc. Jerry was a co-owner of Rock Software, a financial software company for tier 1 bankers like HSBC, Bank of America, Paribas, to name a few. We are here Monday through Thursday in the New York session, Monday nights in the weekly Outlook room, and we look for our swing trade there for the week, and Wednesday for Platinum Traders at 1 p.m. on Wednesday. We are closed on Friday because it's Square Up Day. Retail traders should be flat. So why are you here? Kick a few tires. Yeah, sure. Replace your income. Supplement your income. Become a full-time professional trader. Elevate your lifestyle. What do we do here? Well, we teach price action without a reliance on indicators. We teach the methodology that the bankers, the big boys, use to manipulate the market to establish their daily agenda. They print that information in the charts, and we are adept at deciphering their clues and teaching traders how to do it themselves. Our software. We created our own charts that show these clues every day. This means our traders can create a statistically high probability trade plan for today. We never scalp, and our minimum opportunity is 55 or more pips, or we don't trade. Education never stops, and our motto is no trader left behind. We have other tools to help us know the movement for today, the targets for today, and how to press our winners without exception. Why we are different. Our methodology is different. We are target traders, and many of our traders make hundreds of pips a day. Our live rooms are interactive, a place to really earn and learn. Our business model is different. It is based on trader retention, and some of our traders have been with us 18 years or more. Our software is different. It comes with a preset chart for each pair already set up to target trade. It has momentum signals to identify actual money entering and exiting the market. It has special moving averages and tools to find optimum trading areas. We have target tools that are available nowhere else on the planet. So what are your results? Well, we have many traders who have started here and gone on to become full-time traders at banks, prop firms, and just by themselves. Our trading record is taken live by a third party and is published on our website. Seeing results live will tell you that you're in the right place to further your personal journey. If 2 or more traders take a trade we identified, either live in an info center alert or a session recap, then we count it. We only count their one largest trade since we always have multiple entries in a trade. Check these out. You can see here, Robert, 3 entries, 239 pips. We'll only count his 106. Thomas, 5 entries. We'll only count his 114. Kay, multiple entries for 748 pips. We'll only count her 152. So our record is very, very conservative. Some trade rules. An opportunity is only won if we have 55 or more pips to the target. We press our winners without exception. 85% of our trades are entry orders. We enter with only 1/3 of our lots on trade 1, and then we add to a winning position. We trade live. We don't show you trades after the fact. We will first eliminate all pairs that cannot give us a return on investment today. We will review the clues that make a certain trade ripe to cherry pick today. We will alert live the parameters of the trade setup, but we will never call a trade. That is your job. Enter when ready means that most, if not all, the entry conditions have been met. Very important. We always press our winners without exception, and that means that you must place your second trade, which is an entry order, of your trade plan first. Your first trade is usually a market order, but not always. We call this a snowman. Trade 1 is in the head. Trade 2 is in the body. Here's what the snowman looks like in the charts. We'll go up instead of down. Trade 1 is down here on the pullback. We enter with one market order with 1 lot. Trade 2 is the break at the top towards the target, and trade 2 is an entry order with 2 lots. All right. What about stops? Well, each trade is different, but we'll show you how to do that live in the room. Entries are always an even number. Stops are always an odd number on a 3 or 7, never a 5. Your goals to become a sustainable, successful trader are 65% win rate. Get this in your head. That means that if you're trading lights out, you will still lose 35 out of 100 trades. You need a 35 plus average pip capture, which you can't get unless you press your winners without exception. We are here to teach you to fish. If you give a man a fish, you feed him for a day. Teach a man how to fish, and you feed him for a lifetime. We're here to teach you to fish. Our focus is twofold. Use the charts to find an opportunity, and then use that live trade to teach execution. Help traders move to their personal next level on their journey to replace or supplement their income. Where's the trade, man? Many trades we identify may start in this session, but rarely finish in the session. If we get one that does, I will make a separate video of it. That does not change the trading opportunity as long as the dollar index is still provable. We will do a session recap at the end of the session, and it's a short recap video for our worldwide traders to watch later. As we're based in the United States, many of our traders are in Japan, Australia, New Zealand, Europe, London, all over the place. All right. So this video will be available in the Academy under New York Session Recap and in the Info Center, which is free to all traders to download. All right. So do you send trade signals? No, we are not a trade signal service. We do, however, send alerts through the Info Center to our subscribers, typically 4 per day, Monday through Thursday. These are heads-up trade ideas. They are potentially actionable, but you, the trader, must qualify them. Alerts are membership specific. Let's do a little housekeeping. No swearing in the chat or risk being dismissed. No sound, just log out and come back in. Please use your real name in the chat, not Big Daddy Forex Dude or the FX Chick, etc. We're a family, and so we use our real names. New to target trading, there are no dumb questions, so do not be intimidated in the room. Everything is recorded, and this will be available in the Academy in about an hour after we close the room. And we allow no discrimination of any kind. We have all races, religions, and nationalities in here, and we all get along. You will initially learn 4 entry strategies. First is the pole trade. It's the rectangle pattern, and there are lots of videos on our website about it. Then the next one is a break, hook, and go. Normally that's what we're looking for, or a close in reverse. And then if we get a large candle on a breakout, before you enter, let it center. As you progress, add the 6 aces reversal setup. It is for more accomplished traders and should not be attempted by novice traders yet. Wow, it's kind of overwhelming. Yeah, but it's a process. So heads up. First day's here. Be a sponge. Just listen and watch. You're a beginner. Ready to jump in? Start with the beginner's course in the Academy. Not a beginner, but ready to start? The first videos course is where you start. Ready to try our amazing charts? Take a free 10-day test drive. Our trade, if we find one, will be filtered by the ATR left today. The ATR is the average true range of each currency and is a critical part of our ability to capture monster pips. It is gathered every day by Jerry and put in the info center so it is fresh every single day. They look like this, all right? The ATR is the average daily movement, statistically, of each pair. We use the 14-day period, and we also track its historical movement for 6 months in arrears, so we can see if it is strengthening or weakening. So down there in the Euro New Zealand, bottom one there, you can see last week it was doing 136 pips every day. This week it's doing 138 pips a day. That's what we'll use for the target today. But you can also see that it's significantly lower than what it normally does, 150 to 153 pips with an average of 145. So if we had a target that was 15 pips further, we know that this currency can get there. So our first qualifier is, do we have 55 plus pips to the ATR target? If not, we pass on the pair. Why? We don't have any room. We can't press our winner, and this is the key to success in the Forex, cryptos, futures, etc., etc. So let's go into charts now and see what opportunities are available to us.
Good morning, everybody. This is Scott. Hopefully you're doing fine this morning. Morning. Everybody hear me okay? Check. Test. Anybody there? Checking. Anybody hear me? Test. Hello? Anybody there? Oh, I got it. Hold on, my fault. Got it. All right, there we go. All right, everybody there? Thank you. All right, good. All right, so blog post this morning right here. You can see if we get this break down here, looking to come down here to this area right in here, and we'll see what happens on it. All right, so just be aware, dollar is currently going to the upside. So let's go check that. So as you can see, we're trying to break out of this range that we got going here like this. We had a sideways move. All right, typically sideways moves don't work at the top unless that's not the top. So now the new target is at 2.618 up here. Right, so there you go. All right, so we're going with dollar strength this morning, and that's it. And in terms of the we already had ADP this morning, and let me pull it up here. There we go. All right, so we had ADP this morning, and that's over with. Tomorrow we're going to have ISM services in class, okay? So also be aware tonight on this CPI for the Swiss franc right up there, okay? And of course, tomorrow we'll also have unemployment claims, but that's before we open the room up, all right? So there we go. All right, so dollar up means euro to the downside, and euro went down yesterday. Two targeted, just hanging out here, waiting to see if the dollar is going to continue up. They're set to go down, as you can see here. And let's pull up the ATR to it. There we go. Come here. There we go. Couldn't grab it for some reason. I don't know what's going on with that. All right, ATR. Euro dollar ATR is 74 pips. All right, so we'll take this off here. We may actually get to trade the euro dollar today. Who knows? All right. 74 pip ATR. Find the 5 o'clock candle from yesterday. Right in there, we put this high in afterwards. That's the high for the day. Where's the low for the day? 74 pips down. All right. And there we go. And we don't have 55 pips, it looks like. Let me just check it and make sure. Nope, we don't have 55. So walk away. All right. British pound. All right. We already talked about this one. Got an bigger ATR. British pound is an ATR of 102 pips. That's the target right down there at 1.3200 right there. And you can see that the three musketeers are telling you, we're trying to go down, we're trying to go down, we're trying to go down, we're trying to go down. No, we're going up. No, we're going down, and then we might go up a little bit. So they are just a little early, that's all. But if you get the break here, you can see the trade is right here, right there. And you can see trade 1 is here on the break hook and go, and then trade 2 is here, right there for the target, right? How do we trade that? Very simply, trade 1 is in the head, trade 2 is in the body of the snowman. We trade 1/3 of our lots with a market order with 3 times the stop. We trade 2 with an entry order with 2/3 of our lots. When it enters, this stop goes to immediately to break even or better. And then as you approach the target, it's a 1-to-1 risk to reward ratio on all stops. All right. Pretty simple, not very dramatic here. All right. Dollar Swissy headed up. So there you go. And we won't have a trade here because its ATR is too low, but we'll find the target. 66 pips. Find the 5 o'clock candle from yesterday. We go up 66 pips. And there's a target, and we're just shy of it right now. Nothing to do there. All right. Dollar yen. This was an alert last night. So I told you last night, if it reverses, replot the target. So hopefully everybody did that because they did. The dollar did reverse, and up we went. And there's the trade right there. All right. So it's already happened here, as you can see. 198 pip ATR. Where is that target? 198. All right. Find the 5 o'clock candle from yesterday. Let me get up to a 60. 5 o'clock. Where are you? Right down here. 1600, and we put this low in over here. So we're going up for 100. What did I say? 192, 198, 198 pips. 198. There's the target. Just hit it right there. Done. Okay. All right. Nothing to do. It's already happened. All right. So hopefully traders got it. Aussie dollar should be trying to go down. It is. We got a symmetrical triangle here. Let me get rid of it. We got a lot of symmetrical triangles right now. So remember, when you get a symmetrical triangle, right, however you came into the triangle, right, which was down in this case, is how you're coming out of the triangle, typically the same amount of pips. All right. So it's a big opportunity to the downside there if we get it. All right. Let's find the ATR target for this morning. I'm going to put a fib on first. All right, swing high to swing low to swing high, and there's the 1,000. So always looking for the 1,000, which is 100% of that move right there. That's why you look for the 1,000. All right. Then the ATR you overlay over top of that. Aussie dollar as an ATR of only 66 pips, so it's pretty doubtful we'll get this trade. Let me see here. So we put this, where is it? There's 1600 right there. Okay, this is the high for the day right up there. And we're going down for 66 pips. So you see we don't have anything here at all because we don't have 55 pips. Just to make sure though, I'll go down here and check it, make sure we don't have 55 pips. And there we go. See, 55 pips is out of the channel. So there's nothing here. You don't have 55 pips. You do not have an opportunity. All right. So there we go. What I'm looking for. Over to euro yen. Euro yen following the dollar right now. That's very strange. It's not normal. It's a big Darvis box is what it is. Ultimately, we're going to go down on this one. But right now, we're going up right there. Get rid of that. So euro yen and ATR on the euro yen is 207 pips. Buying the 5 o'clock candle from yesterday right there. We put this low in. We're going up for 207 pips. 207, and there we go. We already hit target, so it's over with. Pound yen. All right. So a lot of traders are going, I'm just not getting many opportunities here. Well, that's why you trade to London. The gorgeous thing about the Forex, it's 24/7 or 24/6. So, you might want to get up Tuesday and Wednesday. That's usually a pretty good time to do it. And sometimes even Thursday, depends, all right? Because a lot of the movement's going to happen in London, not in New York. All right? So I used to get up for 3 years. I got up Tuesday, Wednesday, and Thursday every night. It was really mess with my biorhythms, but what we did in those days. All right, ATR on pound yen is big one. 258 pips. Find the 5 o'clock candle from yesterday on a 10-minute, 60-minute chart. 1700 right in here. Here, put this low end down here. We're going up for, what is it, 278, 258, all right? 258 pips. And there's the target. Went to the pip to it. All right, it's already happened. All right, nothing there. New Zealand dollar, can we trade it? Let's see. We're finally getting the trade New Zealand dollar and Aussie dollar. It's now got an ATR 66 pips. All right, get rid of that from yesterday. Went right to target. All right, so we're waiting to continue the downside for 66 pips. Find the 5 o'clock candle from yesterday right in here. This is the high after that. We take the high and we're looking for the low, which is 66 pips down. And there it is right there. And we don't have 55 pips left, so we walk away from it. All right. Aussie yen, right, pushing up in here. Okay, it's a real estate of the week trade, so hopefully traders are staying in it. And it's got a fifth wave target way up there, as you can see. See how big that third wave? 1, 2, 3, 4. We're in a fifth wave to the upside. Let's put the HSI on for the fifth wave. I'm going to go up. I'm going to change it to black so I know that I'm in a fifth wave instantaneously. And you can see there's a big wide open space up there for sure. We're trying to break out of the range right now. Let me get rid of this stuff right in here, and there we go. All right, so do we have any room to the target? And let's go down and find the ATR target. And Aussie yen ATR is 140 pips. Find the 5 o'clock candle from yesterday right in here. We put this, oh wait a minute, that's 15. Yeah, we put this low in right over here. We're going up for, what do I say? We're going up for 140 pips. 140, 140. And there's the target. We already hit target. It's already gone. There it is. All right, I'm going to get a fib on here while I'm sitting here. Swing low, swing high, swing low. Right there. And that's where it's at, the 1,000 right now. All right. Over to Euro Aussie. All right, not finding anything right now. Euro Aussie just going sideways. I wouldn't mess with this until you start getting some angle. But you're making lower highs, but you're going nowhere. See, it's in a 90 pip Darvis box right here. So let's go to 60. All right, you can see on here, it's most likely a descending wedge on here. All right, so I'm going to go ahead and draw that. All right, so I don't miss it right there. All right, so there's a descending wedge to the downside. I do have a channel working here, but it's just going nowhere, folks. I mean, nowhere. Let's go to the 240 and look at it. So it looks like it's doing a lot, but it's not doing much at all. All right. So there you go. I've got a big wide open space down here. MACD says you're a seller in the 240 world. In the 60 world, you're a seller in the 60 world. All right. And what do the Three Musketeers say? All right. Three Musketeers say, yeah, we're going down. No, we're going up. No, we're going down. No, we're going down. We're going down. We're going up. We're going up. So they're telling us they're coming up to the top to go down again. Why do I know that? Because if I'm below the zero line, any up movement again or any movement against this this down movement here has to be considered a pullback, like over here, like over here. All these over here. See, we were underneath the zero line. Pullbacks continued, pullbacks continued, pullbacks continued, pullbacks continued. Okay, where are we at? Pullbacks continued. All right. So let's find the target, Euro Aussie, and go 108 pip ATR. Find the 5 o'clock candle from yesterday, 1600. Right there, we put this high in. We're going down for 108 pips, 108. There's the target down here. And you see on the breakout, we will not have 55 pips. So there's nothing there. Swiss yen, look at it go. All right, it's already hit target and continues on up there. Let me get rid of this to the downside now. All this flip when the dollar flipped last night. All right, so swing low, swing high, swing low. That will find the 1,000, which is right there. All right, there's some room to that 1,000, but we already hit target already. All right, so there we go. So it's already done right there. All right, pound Aussie. All right, now pound Aussie, follows that Euro Aussie. You can see it's a descending wedge also. The difference here is that we've got divergence. All right, so we have divergence. In fact, we have most likely a falling wedge. All right, so I'm going to go ahead and put the falling wedge on. Most likely, it's a falling wedge right there. All right, that would be a buy side. I have it to the upside right now. So let's go see if the Three Musketeers will validate that, and that will give us a change on the Euro Aussie if it does. We're going nowhere, but we've got upside pressure. We're trying to go up. We're trying to go up. We're going nowhere. We're going nowhere. We're going nowhere. We're trying to go up. We're trying to go up. So it's just not clear yet. All right, I'm going to leave it alone. It could be a falling wedge. If it is, it's a buy. If it's a descending wedge, it's going to be a sell. All right, but right now the chart says we're nothing. We're nothing. So if we get this opportunity to the upside, it is a big opportunity. All right. So let me make sure I get the right ATR. Let me take this off and put it back on just to be sure. All right. So pound Aussie, 108 pip ATR. And there we go. I had it up last night and it never went anywhere. 108 pips and it never moved. And we'll find the 5 o'clock candle right in here. Right there, we put this low in afterwards. We take that. We're going up for 108 pips, 108. And you see, we don't have any room left because we don't have 55 pips. Once we get a break hook and go up here. Well, we might. Let me just check it. Just barely. Let's see if possible. Yeah, we do. Yeah. Okay. So from this line, not from up here. See, if it breaks up here, you're too late. You got to get it. It has to break above here and pull back down to here. Now, it's probably not going to happen. But if it does, then trade one would be here. Right? So trade one would then be pull back to here. Trade one is here and trade two is here. Right? But what it has to do is it has to break out like this and then come back down below here before you get the trade. Right? So, I mean, that's a lot to ask of it, but it is there. So, we'll look at it. And what I say on the Euro Aussie, yeah, Euro Aussie, we're looking to go up too. All right, so we got pound Aussie and Euro Aussie, all right, both going up. That means Euro New Zealand should be going up. It is. All right, so there we go. All right, a big target up here, but we put this low in afterwards right here. So we put this low, we go down, drag it down to the low, and now this is all we got left. Originally it was up here. Now that's all we got left. And you can see you got a huge top here. Really, really strong top right there, and it's got to be broken. When you break it, you will not have 55 pips to target. So walk away from Euro New Zealand. Pound New Zealand, all right, pretty choppy as you can see down here in a 3, but let's get up to a 60, more realistic. Here we go. All right, so let me get rid of this from yesterday. All right, You can see we got a little channel. It is a corrective move, however. See, the channel is a corrective move. I'm going to go like this, and like this, and heart line, heart line, heart line. Okay, so I ignored this. Say, what told you to ignore that? My brain, my left brain has got it. And it goes, don't take it, take this one. How do you get that? Go do 300 of them. All right, that's how you get it. And again, another triple top here. It's got to be broken to the upside. Where's the ATR? All right, pound New Zealand. ATR is 128 pips. Find the 5 o'clock candle right there. We put this low end down here. All right, so we're going up for 128 pips from the low from the day. And there's a trade, and there's no trade for us at all, as you can see. All right, so there we go. All right, next one. Got a breakout here. We'll get rid of that. It was pretty steep anyway. Right? And New Zealand yen going to the upside. We're above the zero line break, but we do have convergence for the downside move. And let's go see what the Three Musketeers say. Are they going up or are they going down? All right. And they say, oh, no, we're going up. Yeah, we're going up. 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 All right. They're going up and we're above the zero line break. All right. So they're going up. All right, so we get rid of that from yesterday, and I'm going to get rid of this because if it's going up, it's not there. We're trading right into a day chart top, so we don't want to do that, all right? But we'll trade the break at the top if we have enough room. New Zealand yen, 124 pip ATR. Find the 5 o'clock candle. We put a low end down here, so there's nothing here because it's going 124 pips to the upside, and it's already done that. So nothing there. I'll get rid of the HSI to the downside now. Well, if you do get this reaction up here at the day chart to the downside, this is a huge opportunity here. As you can see, it'd be a real estate of the week trade. All right, you have trade 1, trade 2, trade 3, trade 4, trade 5, trade 6, trade 7. All right, so if you want to trade that, you go put that in, you put that in, you put that in, you put that in, you put that in, and you put that in now. Now, you don't wait, you put it in now. But it's going up. That's good. That's why you want to put them in now, because it's not going to execute unless it turns. If it turns, do you want to be in it? And the answer is yes, I do. You put the entry orders in. Right? So a big possibility here, but it's not here today. All right. Can't trade Aussie, New Zealand, or Aussie, Swissy. Pound Swissy's already gone to target. There it is, and there's nothing left for us. Right? So, what are we going to do? Well, we only got two currencies. We got EA, which is in a possible descending wedge to the downside. Right, and you know, it's got close and reverse. This has got divergence already here. I'm anticipating the breakout. All right, so if that were to happen, right now it's down, and the Three Musketeers say, "Yeah, we're going down, but we got some push to the upside. We're finally getting a little push to the upside. We're going nowhere, going nowhere, going nowhere. Maybe up, maybe up. All right, so you know, maybe up. There's no trade to the downside anyway." So let's flip this down here to the low and see if we even have a room to the top. Come on, get on there. Here we go. Now just flip it to this upside with a 108 pip ATR. And there we go. And we won't have 55 pips on the breakout. So that's gone. All right. So the only thing we got this morning is the pound Aussie. All right. That's it. On a falling wedge. All right. Let me get some fibs up in here. All right, so I'm going to take this move here. I'm going to take this off, although they're using it. I'm going to take this off right here. Remove. I'm trying to get this nice and clean. Get this off of here. All right, there we go. All right. Now I need fibs up here, so I'm going to go up to the 240, and I'm going to take the fib from the swing low to the swing high of this leg right here. All right. Well, why don't you go back here? Well, I can go back there, but this is the next move. This move here. This is sometime later this week or maybe next week. Right now, this is the move. They're using the lines. They know the lines. They know the lines. They know the lines. So I want to know where those are. See? Now, very tough to trade this thing. All right? Very tough. All right? Because by the time it proves it's going to go, it's not going to have 55 pips. We'll be lucky if we get it. I mean, really lucky, because as you can see, this fib is holding everything here, right? That fib is holding everything. So I have to break above there. When I break above there, I don't have 55 pips. Now, if it come up and break above there and then pull back to here, then I would have 55 pips. So as you can see, it's probably not going to happen this morning. Probably not. But, you know, it's the only thing we got to watch. So there you go. Anybody got any questions? Thanks for reminding me, Abdul. All right, let's go take a look at XAU. All right, so dollar going up, and this is going up too. Wow, what do you know about that? That's a little crazy. Get rid of this stuff to the downside. All right, so what are you doing here? All right, we just got a zero line break to the downside, but we're pulling back up from here. No, that doesn't surprise me though, because that would be putting in lower lows. All right, so let's go see. Oh, sorry. What this says. All right. So let me make the candles a little bigger. They're a little small. All right. So the question is this a bull flag to go up, or is this a pullback to go down? You can see you're below the zero line down here. So you have to consider it as a pullback to go back down. All right. And with dollar going up, it makes sense to go down. All right. So, man, I don't know on this one, Abdul. Pretty nasty. Yeah, wow. Pretty nasty. All right, so up here in the 240, it's definitely showing down. All right. So I'm going to go with down, but it's not even that clear at all. I've just got to choose something, Abdul. So I'm going to choose that for now, and that will give me a breakout if it's going to do a double top up there. All right. But I don't trust it to the upside at all, and I don't trust it to the downside either. So there you go. But swing high, swing low, swing high to the downside. Now we got fibs on this thing. All right, so let's go down to the 60 and let's just see if we have an opportunity. Wow, it is nasty, just nasty. All right. So when you get in these situations, this is when you got to sit on your hands, and what tells me to do that is experience. It's not something that you can go study. All right. It's something that happens as you've done lots of your work, right? And you go, I can't figure it out. Well, good. Then you don't touch it, right? And you know, it could easily be going down. It could easily be going. Yeah, I'm sitting on your hands. Exactly right. All right. So if it breaks up to the upside, let's find the 5 o'clock candle here. Get the cursor on here. All right. If it breaks to the upside, 5 o'clock candle is right in here. We have a low here. We'll take the low and go up for 346 pips. 346, add the zero, so it'll take it. And there's a target there if you get a breakout. Now, to the downside, however, man, all right. 346 pips. Find the 5 o'clock candle right there. That is the high right in here. Right there afterwards. We're going down for 346 pips. And there we go. All right. Now, with dollar going up, this should turn to the downside. All right. Now, they don't have to do that. There are lots of times, Abdul will remember that there are lots of times when we have dollar going up and gold going up. They're two separate things, so they can do that, right? Yeah, exactly. USD is holding it down because it's going up. So it's just sort of getting in position and waiting for the fall on the dollar, and then maybe we're going to go up, right? So I target that 26.79 area, Abdul, up there, but I would be leery of it until it proves it. All right, you bet. All right, all we got is pound Aussie. And it's highly doubtful we're going to get this trade. All right, highly doubtful. All right, so this is a good lesson for newbies. All right, if you're new in here, retail traders think there are trades everywhere. They're all over the place, and they are not. All right, there's 5, 8 pip trades all over the place. All right. But if you do that, you're not going to be here very long, or you won't be trading very long, because your losses will overcome your wins. So you can't do that, right? Which means you have to embrace price action. But I can't learn price action in 3 weeks. And that's correct. But you have to start. If you're going to trade with the big boys who produce the candles, you've got to learn price action, because that's what they trade. All right. That's what we do. They're trading naked. We're not trading naked. We're trading almost naked, because we have a MACD. They don't even have a MACD. They just trade what the candles tell them to do. Right. So that's why it takes a long time to learn. Not a long time, but it takes a fair amount of work for you to get it. So you know that you've got an opportunity. Right? So, I mean, this is the only thing, and I don't like it at all. So, I like to cherry pick nice little easy trades. That's what I'm looking for, So we can do some work here today if you'd like. All right. If you want to talk about something, want me to go through something, anybody, especially if you're new or back and it's early on for you again, you want to ask questions, get the question answered. If I know it, I'll answer it. If I don't, I'll tell you that also. I think I like this better, which means there isn't a breakout. Now, you can see if they do break out here, the target is too close. It's almost not going to happen. All right. It had to come out and then pull all the way back down to this bottom before you got a bounce. That's highly unlikely, but it's possible. It's just not very probable. So most likely they'll just structure it and then wait and see what the dollar is going to do. All right. Unless we get some questions, there's no reason to be here. So if somebody asks a question, I blocked my time off, you blocked your time off, ask the question, and I'll see if I can flesh it out for you. Mitch, can you discuss structure versus MACD? Is there ever a time you go against the MACD? Yeah. That's a great question, by the way, Mitch. Okay. So the thing about MACD, all right, so it's on our charts, it's 82% correct. On MT4 and TradingView, it's only 66, which is still pretty good, by the way. All right. So the one thing you've got is you have these times when the market transitions from the buy to the sell. Right? See there? Now, that requires that you look up here and be able to recognize what that is right there. Right? So if this is a pullback, right? Let me pull it down here a little lower, right, so we can see it all. Right? So on this, so they were going up here, and then they transitioned to the downside. All right. Now you don't want to be a seller unless you're below this line, and you don't only want to be a buyer when you're above this line. Now, so what tells me to trade the transition, and what it is making lower highs. See that? We're making lower highs. All right. So I could trade this transition to the downside from the up move. All right. So I now know, all right, this was nothing more than a corrective move, little bear flag here to get it going. Now you can see, here's what they did with it. See, so they took that at face value. See that, Mitch? Because there's an engulfing candle there, right? Now, once we're down below here, as you can see, this becomes an easy one to trade because you're already below. You get a pullback, which is an A, B, C, all right? Break, hook, and go. See that, Mitch? Right? So over here, it's pretty easy here. Over here, it's difficult, all right? So that's why a lot of times you just say, I think that's what it's going to do, but I'm going to sit on my hands because that's a little dangerous, okay? So when they transition, and you'll see that because the moving average comes out into the open, all right? So you can probably see it down here. All right, so you can see here, they were trying to transition to the upside and the upside, but they're not going up, see? So they're going down, right? So that means I'm still a seller over here. I'm still a seller over here. So now what tells me to trade against that? If I had a decent target up here, I would trade against it because of divergence. All right. So I've got divergence in play. Remember, MACD points the way. So MACD is pointing the way up. Always remember that. MACD points the way. All right. So it's telling you we're trying to go up. We are just not officially a buyer until we break above that zero line right there. Now, so what would tell me to trade it? If I had a decent target, what tells me to trade it is price action. I got a falling wedge. You see that, Mitch? So the falling wedge takes precedent. So there's something you might want to do is assign a value of 1 to 10 to all the clues. All right. So, if we were going to do that, we would go, okay, MACD going up. It's not very convincing, but it is going up. That's probably a 6 on a scale of 1 to 10. All right. There it is. Now, the bottom of the range holding, that's probably an 8. See that? All right. Now, the falling wedge is probably a 9 to the upside. You see that? All right. So the conclusion has to be, all right, everything's 6, 7, 8, 9, 10 to the upside. All right. What's to the downside? The only thing to the downside is if this is not a rising wedge, which it sure looks like, but if it's not a rising wedge, then it's a descending wedge right here, which is a sell sign. All right. Now, with this break of the bottom here, and we're making higher highs right here. See, we didn't make even highs. We made higher highs, higher lows, I should say. All right. So I'd only count that as maybe a 3 or a 4. All right. All right, but it's still on the table. It's just that the preponderance of evidence says we're probably going to go up. And then the last piece of the puzzle is, what's the dollar doing? And what is its correlation? All right. So pound Aussie goes with the dollar. All right. So you go, well, how do I know that? Well, go to your ATR, pull it up here, and go down here where you see correlations, and you just click there, and you'll get this picture like this. Okay. So I'm on Euro Aussie. I mean, is it Euro Aussie? What am I on? Pound Aussie. Okay, pound Aussie goes with the dollar typically. Doesn't have to, but it does typically. Statistically speaking, it goes with the dollar. So now that's a big piece of information. All right. So it's telling me, look for the buy. MACD says look for the buy. Rising wedge says look for the buy. Bottom of the range says look for the buy. And its correlation says look for the buy, and it goes with the dollar, and dollar's going up. You see that, Mitch? You see how those clues are all individual, but they can come together. All right. So there you go. All right. So, I mean, if it works for you to, assign a value, that worked for me for quite a while, actually. Now I don't think about it because I just do it. But in the beginning, it was, I finally said, I just got to assign a value here. All right. And if I can add it up and find out that I got everything's 6, 7, 8, 9, 10, then I'm going to go with that. If everything was 2, 3, and 4, then I wouldn't be going with it at all. See? So hopefully that helps you. Okay, that's good. All right. So the MACD, remember, the bankers aren't using MACD. So the bankers are just using price action. So when you see these things, you say, how did they know? How did they know to do that right there? How did they know that from over here? All right. Well, you can see that you might have had maybe a bear flag like that with an attempt to go down that didn't work, and they come back up. Okay, that could be it. We got lower highs. That's a big piece of information. And of course, from that on, they never came. See, they never, ever turned from putting in lower highs. All right. So this is the way you practice it. You take a piece of the chart and you go in the back, and you go, okay, I'm just going to work over it here today because I don't have any trades today. So I'm going to figure out how they made this move here. All right. So first thing to do, okay, moving averages will help you. All right. So over here, we had moving average coming down right here, but this one was going sideways. All right. So that's a big hint that they're transitioning. MACD is telling you, yep, we're transitioning to the upside right there. All right. And you can see that this 240 moving average just stayed still. See all this movement up here? See all that? Look how much it changed the trajectory of this thing. Hardly at all. Do you see that? hardly changed the trajectory at all, but it did change it to the upside. So now that moving average, those two moving averages, and the fact that I'm outside of them, that means I have more buyers and sellers on the 240. I have more buyers and sellers on the 60. And then these are 30-minute moving averages. And over here, I had more buyers and sellers on the 30-minute. Then I pulled back, right? And then I go up, and now we're done. And I go straight away, right? So I see that. I go, okay, I'm figuring this thing out. All right. So then they put in a flag pattern. All right. So this is why it's good to have a little drawer up here. By the way, you can get a Zoom room, and then you'll get the little tools I'm using here. All right. So there we go. We're coming out of here. There's a flag. All right. So the flag is a continuation pattern. All right. Are we above the zero line? We are. See that? So we're officially a buyer. All right. They're not trying to go down. Yeah, there's lots of bears here, but they're trying to go down and find buyers. Find buyers, find buyers, find buyers. Ooh, they found buyers right there. See? All right. So that's where they found some buyers. They kept moving it down, and finally everybody goes, okay, we'll take it at your word. All right. So now you know that however you came into this is how you're coming out of this. And you see that was perfect. A perfect one right there. All right. So what I got on here, I got nothing but candlesticks. I don't have anything else. I'm just using the chart to talk to me. Tell me how did they know to do that? That's just how they did this down here. See, that's how. Remember, they don't have a MACD. The MACD is for you, not for them. All right. So this is how you practice it. All right. You just take chart, and that's why you have these QL charts up here. So you don't have to mess with the ones that you're actually trading. You just go over here and you grab one. Here's the British pound. Remove all the tools and say, okay. So how did they get everybody to do this big move here? How did they get everybody to do that? All right. So you start before that. How did they do it? Because the information is back here. That why this went up is because of something back here. All right. You see that? Something back there told them you're going to go up. So my job is to see if I can figure it out. All right. And I go, okay, I can see the A, B, C. All right. So that A, B, C corrective move, which is to go up. All right. Now, over here, you can see right in here, you had MACD transitioning to the upside. See there already. All right. So let's take this move right here, and I'm going to put a line on it and see if I can come back to it. And let me get that changed. I'm doing all this as I go because as I use something, I have a whole brand new hard drive in here. All right. So there, I'm going to go back here now on a 60. All right. So the 240 told me that we were going to go up over there. Now going back here, you can see. Here's where that 60 is. All right. That's why you start up there in the 240 because you got 6 candles for every 240 candle. So you got 6 times the candles down here. All right. So now I see what it was on the 240. It told me, yep, you have an A, B, C. All right. Now I look over here and I go, okay, wow, look at that close in reverse right here. What did MACD say? We're turning to the upside. Okay, so this is a great place, Mitch, where you would do this. You would go against the MACD because all it has is it just hasn't happened yet. It happens 2 candles later. But you can see you're already transitioning up. The ABC back there said we are correcting to go up. All right, so that close in reverse is extremely significant right there. You see how significant that close in reverse is? And in fact, it was the start. Nothing is never come back there. See that? All right. All right. So then what do they do up here? All right. So up here, they get a little movement here, and then they go straight and do a flag. All right. So now I know, okay, then the flag target is from here to here. That means I'm coming out from here to here. What did they do? They did it. What is the ABC? This one is an ugly looking one. That's why I'm not really counting it because it doesn't have an angle. If it had an angle like this, I'd count it as an ABC. Abdul, but because it's straight across, okay, before the cross, okay, over here, that's off the 240. Right. So remember, you start on the 240. So let me go back to the 240 and over here. All right. So here was the 240. So remember, 240 is the structure. what is the structure and what is that structure telling you? That's not the minutia of trading. That's just trying to figure out what is the higher probability, up or down, right? And so you see right here where they did the A and the B and the C to a close in reverse right there. See that? So that on the 240 said, look for the buy. That look for the buy. All right. Then we're looking for the buy, and all of a sudden you see the transition right there. See, that's, oh, we are transitioning to the upside. Now I go down to the 60 minutes. That's why I always start on the 240, because what we're going to do today is predicated on what is in the past. All right. That's why traders, if they don't spend the time doing the work, they get whacked. They get whacked. All right, so now I'm going to go back here to this stop. So this is where we determined that close in reverse was on the 240, and we're headed up. And this was a very, very significant close in reverse right there. And we got a white dot. See, the big boys came in immediately. All right. Now, at this point, right now, once we break above here, all right, first of all, MACD is telling you, yep, you're up, and get a little pullback, and yep, you're up. Okay, see that? All right, once we get here, we can see this. I am above the 240, so I got more buyers and sellers. I'm above the 60, I got more buyers and sellers. I'm above the T3, more buyers and sellers. I'm above the 30-minute moving average and the 30-minute moving average. I got more buyers and sellers. All right. All right. So then they put in the flag pattern and accomplished the flag from off this bottom right here. All right. Now, they're going nowhere. So they got another flag in play, right? Now, that's a big hint that you might be going up still, because that's a continuation pattern, but they didn't find any buyers. So they pulled back, all right? So we'll take this off here, and we pop a fib from the swing low to the swing high right there. And now we see they retraced to the 618, and that was it, all right? From that point on, and MACD said, are you going down? And MACD says, yeah, you're going down, but you're only going down in this pullback. That's it. So they were seeking buyers, finding buyers. Let's see if we find buyers. They found them at the 618, but the time of day was probably wrong. That's why they didn't ever move it. But once they got the buyers involved, then it was pretty easy to see why they ended up doing that right there. All right. What did MACD tell you? You got a zero line break. MACD points the way. See that? You see how to practice figuring out the market, because you got to do it anyway. You got to do it every day on every currency. So what do I got to do? That's a skill that I need. I need that skill. How do I get that skill? I got to go do them. Just got to go doing them. Every time you get a break and you're sitting in front of the charts and you got to trade on and it's slowing down or whatever, go over to the QLs and do some work. Get better. Right. Then they go to the 618 here, and then they pull it back down here. Right now, you got a zero line break to the bottom. Right, when you get a zero line break on the MACD at the bottom of the move, as you can see, that's the bottom of the move. All right, no matter what, even if they're going down, they're going to have to pull this up to go down. All right, but when they make the turn, MACD said, no, you're going up. Now, when that happened, instead of on the down move, we got the MACD to the downside at the very bottom of the move. Here we get the MACD move at the bottom of the move to go up. That's fantastic right there. All right. And we already know that we got more buyers, more buyers, more buyers, more buyers, more buyers and sellers. See? All right. So that's why there are these moving averages on here. Why? Because they're feeding you a piece of information. That's what they're doing. Now, every pullback is going to create an opportunity for us, because the pullback is my friend. It is not my enemy. It is my friend. All right? So I'm still missing a bunch of stuff. It's all hidden on that drive, and I got to keep pulling this stuff over on the drive. All right. So every pullback here gives you an opportunity. So we'll just take them up and let's work all these pullbacks and see what that does. All right. So I'm over here. I got a swing high, swing low to a swing high. I got to pull back to the 50%. Right. And if I can take this top off, the key is, can you take that top off? If I ever take that top off right there, these are the targets. All right. So when they finally took the target, they finally took the top off right here. Where'd they go? To the pip to there and to the pip to there. See, now I knew that back here. See, will they get to the 1270? That's the outside target. All right. But these two right in here, I got this is reward for risk. All right. See? So did the chart say, yeah, we're going to go up? That's what they said. All right. But we didn't get enough traction. All right. Now, if there's no participants, then they can't do it. All right. So now we got another pullback here. So we'll mark this one from the swing low to the swing high here. This pullback to the 618. If they take the top off, they're going to the 270 and the 618 and maybe the 1270. Where did they go? 270 and 618. See? All right. Now, as I'm working this, I'm seeing how they work, how they use the math. They're using the math. All right. They don't trade unless they know where they're going. That's why we don't trade unless we know where we're going, and we're trying to guess where the bankers are going. All right. So the chart's got to have the information in it. All right. Now we got a big pullback. And how did we get this pullback? A, B, C. All right. So what am I thinking? All right. I got a zero line break here to the downside. And, you know, that was a significant little move right there. Probably 3,400 to 30. That's a 100 pip move right there. See? So that's why you got MACD down. Now, it makes a turn over here to the upside. What does the MACD tell you? We're transitioning to the upside. All right. Now, if they can take what I just pop a fib off this one. All right. Get rid of this and pop a fib for this pullback. All right. All right. So I go from this swing low to this swing high and a 618 once again. Remember, if they can take the top off, those are the two targets. And there's one on the extreme up there, way up there at the 1270. All right. So you see, they didn't take it off. They didn't take it off. They didn't take it off. So are they trying? They're trying, but they're not getting any traction above there. That means they're going to have to do another pullback or a reversal. And that's what they did right there. All right. Now, I'm on a 60-minute chart. All right. Once they broke here to the downside, right here, you see, I got the zero line break right here at the top of the move. Right. All right, it was a flag pattern to the downside. All right, so however they came in here is how they're coming out here, and they did that already. All right, plus they did this right here. Did they go to the fib? Yep. Did they go to the fib? Yep. Did they go to the fib? Yep. Did they go to this bottom? Yep. That's exactly where they went. See, so they used the math to the downside. Now that would have been a trade you might have missed. All right, just because of the structure, but you know it's not the last trade in the forex. All right. So that's where we are right now. All right, now we come down and we're up. We're right here. We're making lower highs on this pound dollar. All right, making lower highs, and we got a close and reverse to the downside. We're below the zero line break, and you can see the MACD is rolling over to go down. It's pretty small right now, but you see how it's turning to the downside right there. All right, with a flag pattern, and however you came into that flag is how you're coming out. All right. See how we figured this out? All right. What is telling me to do all that? Price action. Price action is telling me what to do, what to look for. That's what it's telling me to do. Good. I'm glad it's helping. That's what we want to do here, Mitch, is when we don't have a trade, we only got one and it's a lousy one. Well, let's work on something. Let's get better at something. All right. See? So, you know, and just okay, I did that. All right. Now, how long did that take me? You know, I was talking. It took me 10 minutes, but it would take you only 5 if you were doing it. All right. Let's go find something that's going the opposite way. All right. So, you know, let's go. I don't want to do the euro. Where's the pound at? Pound dollar. Where are you? Right here. Oh, that's one we were doing. Okay. So now I want to do something that's doing, you know, this dollar yen will be interesting. All right. All right, so we can just stay right here, figure this one out over here. All right, so how we got a zero line break up here, so we're officially a buyer. All right, you see that? All right, and we're up to a 240. All right, so I need to see the structure. All right, so what's the structure here? The structure is a big box. See the box? It's a big box. All right, so once I know the structure, I'm headed up here, which means I'm going to use the math from someplace. Where would I use to get the math? I would get the math back here from the swing low and the swing high of the structure. See, that is the low of the structure. That's the high of the structure. And I put the fibs on there and then I go Prove to me you're using those fibs. And when you see them touch those lines and run along those lines and run along those lines like that and run, stop right there. See that? Stop right there, stop right there. That's it. Now remember, why is that important? Because that line right there is a contested area. This line right here is a contested area. This line right here is a contested area. But the space in between them is uncontested, uncontested, uncontested. See how they run in those lines? Right? They just run them up, down, right here. Right? Look at all of them in here. Uncontested, uncontested, uncontested. See? All right. So my job is to find those lines and see if I have room in between them. All right. That's where my trade is in between them. When I hit one of these lines, that may not be the target for today, but it's where I have to move my stop. And this is why the rule is I only move my stop if I have a mathematical reason to do so. I don't move it because I want to protect 12 pips. Oh, I'm going to put a I'm going to put a trailing stop on it. 12 pips, man. I got 12 no matter what that way. That's not trading. That's gambling. All right. That's not trading. That's gambling. All right. So where is the target? How can I trade it? How can I add to my position? All these things have to be thought through. All right. All right. So I got that. Now I'm going to go down to 60. All right. I know what the structure is now. All right. So you can, and what you also can do is this, Mitch and Abdul and everybody, is to go back here and say, okay, I got the lines, and I already know what they did. All right, but could I do it if I'm over here and figure out what they're doing here? All right. So I'll pull it off to the side, and I don't remember where they are, but what does MACD tell you? MACD is pointing the way up. All right. I got to close and reverse right there to the upside. Right there. They've already proved that they're using these numbers, right? Right? They've proven they know these numbers. So I know that if I do go up, there's a possible opportunity here. There's an opportunity here. There's an opportunity here. There's an opportunity here. And it might be an opportunity at the top. I know that now. All right. So there we go. All right. So now we'll move this a couple of candles here. And you can see they went right up there to that, pulled back, and now they broke through here. All right. So the question is, all right, I am below the moving averages on a 60. I'm below the moving averages on a 240. I'm now above the moving average on the T3 and the two moving averages in here. And I just got a zero line break on MACD. All right. So here you go, Mitch. All right. When do I go against it? Well, actually, it's telling me you're not going to go against it if you buy. Now, we're seeing the end of the candle right here, but when it's live, you're going to be seeing the beginning of the candle. See, at the end, we see the end result in the past. But when it's live, you're going to see this breaking at the bottom of this candle here. All right. Now, I already know that this target is out of the way. This one right here is gone. That means that this is the next target and this is the next target. All right, that's it. All right, so I can make a business decision here whether I want to trade this at the bottom of the candle when I get the zero line break, because I've seen it after the fact, so I see a full candle, but it's down in here, and I go, okay, it's 92 to 36. All right, so I got 55 pips in there. Looks like. All right, so maybe I can take that. All right, now. A couple more, and sure enough, they go right up to the next target. See, that's uncontested, so they'll go to the next one right there. See, all right. Now, in the real world, I also have the 1,000 and the ATR on here. All right, why? Because that would be it. I don't know what it is back here because I don't. This is in the past, so I don't know what the ATR was there. But if I'm live, I know what the ATR is for the day. All right. Now, if we can ever get a pullback here, which we do over here. Right there. All right. So if we ever get a pullback, and we do, right in here, you can see the ABC, A, B, C to that bottom right there. All right. So what do I do with that? All right. So now I pop a fib on that. Let's mark that and go down to the 10-minute chart. All right, so that's how you do it. Okay. Would I be able to take an opportunity? What the heck? Hold on. Why? 3 set as default. Okay, there we go. So now I'm going to go down to the 10-minute chart, I'm going to scroll back to there and see if I would have been able to get a trade off of this. Okay, so now here I am on the 10-minute chart. Right? I got a lot of candles now, but we can now easily see the A, B, C to a close in reverse right there. Right? MACD is already transitioning up. There's the zero line break. Do I want this one? I don't want this one. Why? It's at the top. See, when it's at the top, they got to bring it back down. But now I get another close in reverse right here. And at the time that that happens, I'm above the zero line break right there. See that? All right. So my thought process is there's the opportunity to the next fib, and there's the big opportunity that I don't want to miss, because that's got 1, 2, 3, 4 T30s in it, 120 pips up there. All right. So it looks totally different on a 10, but I don't go down to the 10 till I got it figured out on the 240 and the 60. Otherwise, I lose track of all that because there's so many more candles. It's information overload. So I'm looking for an opportunity to buy is what I'm looking for. All right. Now, I'm not getting much, but right now, I'm above the moving average on a 240. I'm above the moving average on a 60. I'm above the 30 and the 30 and the 30. MACD just gave me a zero line break. Do I want to take that trade? The answer is, if I know where the target is, which I would normally know, but I can find one of the targets. I go over here and pop a fib from the swing low to the swing high to the swing low with the Fibonacci extension key. It takes 3 clicks. If you don't have 3 clicks, you can't use it. Now I got targets up here, and you see the 1,000 is right on that fib. Wow. There's this, and this big one up here. All right. So do I want this? I want that. Will I win on it? I don't know if I'm going to win on it. I don't know that. All right. Let's just see what happens. All right. They're having trouble. And there they go. All right. So this is the pound. The pound's the dog lately. All right. So now they respected that line. All right. We know the target is the 1,000. Let's see if they get there to the pip. But the only way they got there was to do another pullback. Why did they have to do that? Because professional buyers won't buy at the top. They didn't get to target. They got to pull it down so that the professional buyers will come in and take it up to target. You see that? There it is. See, the chart is always talking to you. Now, the reality is, and as you look at it, you go, but what I'm really in is a big sideways move. See that? I'm in a big sideways move. That's it. So it's tough trading when you see this kind of stuff. All right. It's not tough trading when you see this kind of stuff. But when it does this big sideways move, that's tough trading. Is there trades to be had in there? Yeah, there are. All right. So once again, here we are. We went to the 1,000. We pulled off of that 1,000 right there. Let's go back here to this. All right. So we pulled back off right here. All right. And you see, I'm above the zero line break right here. All right. So I'm officially a buyer. I got a pullback. All right. I'm looking for these targets up here. All right. I got a pullback. All right. So that pullback should find some buyers, because the reason they came down was to find buyers. If they find buyers, they're going to go. If they don't find buyers, they're going to go lower. So I'm hoping they're finding buyers. All right. Do I want them to pull back? I want them to pull back. Why? To find buyers, because I want to be a buyer. See? All right. And what traders think on their retail traders, I don't want to pull back, man. Well, the reason you don't want to pull back is because you're buying here and living to the pullback. Buying here and living to the pullback. Instead, you got to flip that. All right. I let the pullback happen and buy here, and I take that. Let the pullback happen, I buy there. See, you got to do exactly the opposite. All right. And that means your right brain, when you're doing that, your right brain is in control. The left brain has to go in and say, listen, we got to have a pullback here, buddy. All right. So right brain, you're in timeout. I'm taking charge, and the pullback is my friend. So I'm looking for that. All right. So once you get it, all right, there she is. All right, right up to the 1,270. They know where it is? Yeah. That means they know where the 1.618 is. They're going to get there. Oh, see, when they took it off there, see, they had to come down and find buyers. They found buyers. See the close in reverse right there? There's a close in reverse. What does MACD tell you? You're a buyer. Be a buyer. All right, there we go. And wow, that worked out pretty nicely. See that? So what is happening? The chart is talking to you. What I got to do is learn the language of the charts. All right. And just like if I want to go learn Spanish, I got to practice it every day. All right. And I do, by the way. I've been doing Spanish for 713 days in a row right now. 713 days, I spend 15 minutes a day learning Spanish. Why would I want to do that at 73 years old? Well, because in 2 years from now, 65% of America, where we live, is going to speak Spanish, right? And everybody who can't speak Spanish is not going to be able to get along very well. Well, I want to learn. I want to be able to do it. So I have to practice it. It doesn't come naturally, right? It's the same here. There's a language in the charts. It is talking to you. How do I learn a language? I got to practice it. How do I learn to be a trader? I got to practice it. See? And it's just not rocket science. All right. And sure enough, that's where we are right now. See that? 300. There you go. That's right. Now, this is what you do after you've done your 300, because when you do your 300, you'll start to see them. Oh, I did 300 closing reverses. I see that closing reverse. 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 See that closing reverse. See, you don't see them until you train your brain to see them. But once you see them, you can't unsee them. All right. So, you know, it's like, let's see if I don't think I have this one. I got to get a lot of stuff out here. But let me pop this up. I have one on my computer, but I haven't found it yet. So I'm still looking. All right. So let me give you an example that'll. So this is a FedEx logo. All right. Now, if you've never seen this, there is an arrow in the FedEx logo. There's also a spoon, by the way, but the arrow is the most important thing. Now, if you've never seen that arrow, you go, what? In fact, we had one of our traders. She had a side business, and FedEx came every day to her house and dropped off product that she was doing. I don't know what she was doing, but so one day she went out to the truck. She said, have you ever seen the arrow in your logo? And he goes, what arrow? We don't have an arrow in our logo, FedEx. He handles 500 packages a day. And she showed him the arrow, and he freaked out. And he said, next day he came back and said, I wish you'd never done that, because now all I see is that stupid arrow. All right. Well, once it's shown to you, all right, you can't unsee it. From now on, if you never saw that arrow in there, you will never not see a FedEx logo without the arrow. All right. See that? Well, what are we doing here? We're trying to find the arrow. All right. We're looking in here, and we're looking in a chart. And since we practice certain things, things start jumping off the page at us. Okay. So this was a no-brainer trade here. Why was it a no-brainer? Close and reverse. MACD's headed up all the way here. This is told you way back here. We're going up all the way back here where you got a zero line break right there, and you got a T3 break. Now remember, if you go do that work and you mark those, and you go, if I get a MACD break in either direction with a T3 break, what's the percentage chance of it continuing in that direction? Well, when I did it was 82%. Now, when Abdul did it, it was 90%, because it depends on the real estate when you're doing it, right? But whatever your number is, you got to know it, okay? So if I get a zero line break to the upside, I've already figured out I'm a buyer because I came from the 240 down to the 60, and now I'm on a 10, and I get a zero line break to the upside. I know it's 82% going to go in that direction, all right? So what did it do? It went in that direction. See that? All right, where did it go? To this line, 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 and we're just shy of this one, and we're going to tap that in the next 4 or 5 minutes, most likely. See that? So this is the work. Yeah, you got to knock down to 300 because you got to be able to see this. But once you've got that knocked down, now I got to put all that to work. All right, there are going to be clues in the charts that's going to tell me what the chart, the currency is trying to do. All right, will it be successful? I don't know. All right, there's all kinds of stuff happening here. All right, so you can see pullback, pullback, all right, sideways move, which is a flag, all right, and we never got another pullback till we broke that thing. That's a contested area. This is a contested area. The space in between is not. It's 70 pips right there. 70 pips right there. All right. This one up here is only 40 pips. All right. But if you're already in 70 and there's another 40 here, you can certainly take advantage of it and grab the 40. What do I got to do when I hit here? Move my stop. Why? Because that's the big, after this is a big target, 4.236 way up there. All right, so I move my stop. What do I move my stop at? 1-to-1 risk to reward ratio. What if it blows up and goes to the next one? Then I'm in. What if it pulls back down? Then I get taken out, but I get taken out with all this profit, assuming I'm in the trade, obviously. All right, see there? And that's what you do. Now, I'll give you a hint. If you want to really ramp up your trading, anybody want to do that? Would you like to have a secret that will ramp up your trading? Here it is. At the end of every session that you traded live, at the end of the session, you go back on a chart and you find a chart that moved and went to target and you did not trade it. Even though you were here, you did not trade it. So your goal is to say, why didn't I trade it? What did I miss? All right. And if you'll do that, it will take you all of 5 minutes to do that at the end of the session. If you do that, and there's 200 trading days a year, all right, if you did that every day when you're done trading, you would have 200 more live trades in your repertoire. Even though you didn't trade it, you went and pretended you traded it, and that's how you found it out. So you would have 200 extra trades of experience by the end of the first year. All right? And it only takes 100 hours to become world class. You can become world class in anything, or sorry, world class. World class would mean you are better than 95% of all the people like you on the planet if you'll spend 100 hours doing one thing, whatever that is. All right. So let's say I want to become a world class pullback trader. Why would I want to do that? Well, because the market pulls back, all right? Pulls back, it 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 pulls back a little bit right there, pulls back, bounces, all right? So if I was world class in all those, I wouldn't miss very many of those if I was world class, all right? Does the market pull back? Yes, it has to pull back to find the buyers and sellers, whichever way they're going. It has to pull back. All right. Therefore, if I could become world class in pullbacks, the first thing that would happen is I would quit buying at the top and I would start buying at the bottom instead. Well, that would be a big difference right there. See? But in 100 hours, how long is that? It's 2.5 weeks, folks. In 2.5 weeks, if I did it just like a job, 8 hours a day. Now, you won't do that. All right. So, yeah, maybe it takes you a month and a half. All right. But you could become world class in something. So what do I want to do? I want to be world class in something they do every day. What do they do every day? Pullbacks and flags. All right. So if I was world class in flags, I would not miss that trade right there. I would not miss that trade. All right. Because I'm world class in it. All I got to do is measure how I came in, and that's how I'm coming out. All right. So how do I do that? You can use a fib right here. Swing low. Swing high of the flag, swing low of the flag, right there, and the 1,000 is where they go. See where they went? Why did they stop there? Because that was the target for the flag. All right? They're not done yet. They're still working their way up, but that was the target for the flag. All the flag traders traded it to the 1,000. All right? Become world class in one or two things. Actually, become world class in two things: flags and pullbacks. Once you're there and you're a world-class trader in those two things, you can earn while you learn. All right. I want to learn Gartley's and forensics. That's exactly right. Yeah, there you go, Peter. I want to learn Gartley's. Okay. But you can make a living while you're learning Gartley's. I want to learn bats. Well, go have at it. That's all I'd say. We do have a trader who does that. Hold on just a minute. I got to help my wife find her phone. I'll be right. Well, there we go. All right. So, we had nothing to do this morning. There was no trades but the pound Aussie, and it was a really lousy trade. And did we miss anything? We didn't miss a thing. See, we didn't miss anything at all. All right. So we didn't miss one thing, but we ended up, getting a couple lessons out of the deal. So it becomes a positive morning, even though we didn't trade. All right. So there you go. All right. All right. Is everybody good? Okay. So I don't see any reason to hang out. That was a good lesson. You just let that sink into your brain. Go. When I close the room, go practice what we just did. What I just did for the last 45 minutes or so. Take 10 minutes and go in the chart and go to your QL charts and go in the past and go find an area and see if you can figure it out. See if you can figure it out, because they have to tell everybody. They have to tell everybody what the agenda is. Otherwise, nobody would trade. So they do that in the charts. They can't call each other up and say, HSBC, this is Bank America. We're trying to turn this pound Aussie back up to do the top of the range. They can't do that. So how do they do it? They do it in the charts. And professional traders who know price action are adept at figuring those clues out and figuring out what the agenda is. What is the dumb money or the retail trader doing? He's following, or she's following, some stupid indicator which has no idea what price action is. All right? None whatsoever. All right? So even our little indicator down here, MACD, it's not 100% right. It's 82. It's not 100. And if you're on MT4, it's only 66. All right. So, that's the reason. So it's all about doing the work. All right. The more you do the work, the better trader you're going to become. There you go. All right. Let me do a session recap here.